So in this video, guys, we're talking all about supply and demand, and more importantly, some secrets you can use to really be able to take advantage of it and use it well. So a lot of people online assume that I trade supply and demand often. It's actually not my core strategy. I do use some concepts of it, but it seems to be the hot thing all over YouTube. So everybody's talking about supply and demand, how to use it, how it's the greatest thing since sliced bread. So we're going to talk a little bit about it today because I think it's done incorrectly a lot. We're going to talk about what it is, what to look for, how to create them, specific setups to look for, and where most people go wrong with it. But in honor of supply and demand, happen to be wearing this fancy supply and demand sweatshirt. So thanks to my student Eric for sending me this as a gift, but figured if we're going to talk about supply and demand, might as well look the part as well. So let's dive right into it, guys. Talk about supply and demand and how you can take advantage of it. And first thing to really talk about when it comes to supply and demand is just what it is and why people like it in the first place. Because if you don't understand the logic behind the strategy that you're trading, you really have no business trading it in the first place, because it's a good way to make mistakes or not really understand where the best opportunities are and why they're there. So the concept of supply and demand comes back to, well, really just an auction. So anytime you're buying, selling stuff. So it's basic economics. And what most people don't recognize is that the stock market itself is just an auction. It's bidding between buyers and sellers, just like if you were, bidding at some other kind of auction, garage sale, whatever. Garage sale is probably a bad example, but if you're going through any kind of bid where there's buyers and sellers, stock market functions the same way. And what you'll see happen throughout the course of a market day on any particular stock that you're trading is there'll be periods of time where you have an agreement between buyers and sellers. So kind of agreeing on the same price. So for example, let's say, we had PlayStation 5s and everyone kind of agrees that PlayStation 5s are $500. I actually don't know how much they are. I probably should figure it out because girlfriend wants one for Christmas, but I digress, different story. But let's just say we're working with PlayStation 5s, okay? And everyone kind of agrees that they're $500. Buyers are willing to pay $500. Sellers are willing to sell it for $500. So there's general kind of agreement between buyers and sellers. And all of a sudden, there's way more demand for it. So people want to buy more and more and more PlayStation 5. So inventory shoots up. All of a sudden, boom, price of PlayStation 5s go way up because there's way more people that are willing to buy it. And now all of a sudden, it's selling for $700, $800 because there's so many people that want to buy it. Well, what ends up happening is that some people don't get to. They missed out on that opportunity. Price moved too quickly out of that area, and the people that wanted to buy it at $500 couldn't do it anymore because there was so much demand that all of a sudden they're selling for $800. And this is really how supply and demand works as well. And I'm going to give you some examples of that. Then I'm going to teach you how to actually trade off of it. But it's important to understand the concepts of how that works to really understand how you can make money off of it. So as an example of this, I'm going to bring up just a SPY chart here, and I'm going to switch to the 15-minute. Usually I'm drawing my supply and demand zones on either a 5-minute or 15-minute chart. That's because I like to trade on a shorter time frame. So I'm usually taking trades off of a 1-minute chart. If you like to take trades off of a 5-minute chart, you probably shouldn't be using 5-minute supply and demand zones. You should probably be using 1 hour, 4 hour, maybe even daily supply and demand zones. I like to trade on shorter time frames. That's how I make money, and that's what works for me. So we're going to look at a 15-minute chart here, and we're going to just go create a demand zone. And there's really a couple different ways that you can create supply and demand zones. One way you can create a demand zone, as an example of this, is called a drop, a base, and a rally. And what that looks like is this right here. We have this drop, we have this basing period. So think of this like that agreement on PlayStation 5s, right? This is our agreement. Hey, we're going to buy and sell them for $500. We have this smaller candle in here. It's more of an agreement between buyers and sellers. And boom, demand shoots up. All of a sudden, those PlayStation 5s are selling for $800. Works the same way with SPY, any kind of stock that you're trading. You have this drop, this agreement between buyers and sellers, and another big explosive move up. And this is where your demand zone gets created, in this area where there was agreement. And the reason we call this a demand zone is because if price returns to this area, there's likely to be more buyers waiting here to step in and drive price back up again. Why? Because they wanted to buy PlayStation 5s at $500 and they missed the opportunity to do that. So if price revisits this area, those people that had leftover buy orders here are going to end up getting filled at the price that they originally wanted to get filled at, and it's going to drive price up again. So if we're looking to make money off of something like a demand zone, we want to understand how those get created. So we're finding those areas of agreement called basing areas, and then a big explosive move out of there, knowing that if price returns to that area, there's likely to be buyers that step in again because they missed out on the opportunity to buy the first time. And this is how a demand area gets created. So how can we actually take a trade off of this? Well, I like to trade them on shorter time frames, so that's the example that I'm going to give. Again, you don't have to do it the same way as me. You shouldn't take this as personal financial advice. It's just advice, okay? It's stuff that you can learn, you can practice. You ultimately need to find your own style. It's not even specifically the way that I make most of my money, but I know it's a way that's super popular online and that you may want to learn more about, and you can make money this way. So let's dive into a shorter time frame and see what that looks like. And this is one of the biggest mistakes that I see with supply and demand. So let's go back to that 15-minute time frame. And what most people, most internet gurus will do is they'll come on here and be like, yeah, it's easy, right? You just create demand and then price comes back in here and you just buy it when it comes back in and it's great. Or when price comes out of this box and you're good to go. Here's the mistake. Supply and demand is not a strategy on its own. It's just a concept, okay? It's a concept between buyers and sellers and how the stock market works. For it to really be a strategy, you need to be more specific than that. So you need to know, okay, now that I have a demand zone, what is the setup that I'm going to look for? When am I going to enter? How am I going to set stop losses? Where am I going to set my profit target? If you don't have those things, then supply and demand on its own won't work for you because it's not specific enough. And this is where most people fall short. They'll watch some YouTube videos and it'll be like, okay, well, we got a demand zone and like price comes in there and it comes out and you just buy, right? But it's not that simple. If you're trading options, how many contracts do you do? When do you buy it? Where do you set your stop loss? Same thing with futures. Any kind of symbol tool that you're trading, you need to have specific set of rules. So what I'm going to do is break this down on a shorter time frame and show you specific things that you can look for. So 1 minute chart, we'll take a look at this demand zone in here and I'll show you where it got created and then where you had an opportunity to buy. Okay, we'll go all the way back to earlier in the day. I'm going to pass on this and come back over here. Okay, so it might be tempting to be like, okay, we'll buy here, right? But keep in mind, we didn't know this was a demand zone yet. We had to wait for price to come out of here, get this explosive move. So after this happens, this is where we created that demand zone on the 15-minute chart. What we're looking for is price to return to that area. And we do see price return to this area in here. And I'm going to give you a couple different setups that you can look for to try to gauge where to find an entry. And the first setup, we're actually going to go to the second retest of this because I think it shows it a little bit better. The first setup is what I call a single. And usually you see these happen towards the top end of a demand box, maybe into the middle, usually not towards the bottom. But what you're looking for is a specific kind of candle action. Think of it like a 2-candle sequence where you want to see one candle where you have really good downward wick action if it's a demand zone. What this is telling you is that price tried to go lower and immediately got pushed back up. So orders got filled in here that pushed price back up, and they got filled in a pretty rapid way. That's what this wick is. It's telling you the price tried to come down here and immediately got pushed back up. And a single setup is you wait for that kind of wick action, and on your next candle, if it opens above, that's where your entry is. Okay, this is designed to be a quick hitter trade. So you're in, you're out in basically a minute, a couple minutes. Really shouldn't be holding them any longer than that. It's one kind of setup. You don't have to trade this kind of setup, but it's an example of how specific you need to be with how you're going to trade off of this. It should be very specific in terms of exactly what you're looking for. Otherwise, it's going to get confusing for you. Second kind of setup I call a double setup. And all you're waiting for in this instance is for us to come through this demand zone, come out of it, and clear out any kind of what I call consolidation. So all this agreement between reds and greens, buyers and sellers, you want to open above all of this. We don't have anything to the left of it. So there's no more agreement over here, and what you're looking for is for price to fill the rest of this one-sided area. So we're nothing but bearish, nothing but sellers over here. Now that we've cleared through this consolidation, we've opened above. We want nothing but buyers on the way back up until we get to another area of agreement. So we see more red and green paired together. This is where we want to take our profits, right in this area in here, now that we've filled the rest of the space. I call this a double because you usually get a little bit bigger of a move off of it. But those are some specific setups you can trade off of supply and demand. So again, just to recap, supply and demand is a concept. It's a concept between auction dynamics. So you have buyers, you have sellers. When there's agreement between buyers and sellers, you find these consolidation areas. When you see big explosive moves, it means now there's not an agreement. Price is one-sided. If it returns back to that area, you may start to see orders get filled again in that direction. So if we have a demand area, price comes back in there, could go back up again. If you have a supply area, price comes back up there, could go down again. And if you want to trade supply and demand, you want to get specific with the kind of setups that you're looking for, because specifics with trading allow you to create rules, and rules allow you to take a lot of the emotion out of it and stay disciplined. And you're going to need both of those things to be successful. So hope this video was helpful, guys. If you like videos like this, let me know in the comments, and let me know, do you like supply and demand? Do you try to trade it now? What's been the biggest struggle? Let me know in the comments. I'll circle back, answer questions in there, and be sure to subscribe and share this channel if you like more content like this. Again, if you want to be one of our top subscribers, we give away all of our ad revenue every month to our top subscribers. To put yourself in the running, like the videos, be a subscriber yourself, and share it to as many people as possible so we can get this information out there. See you guys on the next one.